Happy Information Wednesday, Chalyce McQueen here. For my teaser video, we're wrapping up our final segment of Operation Protecting the Golden Goose. Last week, I talked about whole life. Today, I'm going to talk about still whole life insurance, but two different products surrounding it, an index universal life and a variable universal life. Both, again, are whole life insurance policies, but they have a little bit of a different opportunity for you. So we're going to dive into that here now. So an IUL, an index universal life, and a VUL, a variable universal life. Again, they both are whole life products, and they both work in a similar capacity, but there are some major differences that I do want to express. The main thing being, again, it's a whole life, so permanent life insurance. So as long as you're maintaining the premium, you have that guaranteed protection. And then when it comes to a whole life product, you do have a separate cash accumulation account. What makes a IUL and a VUL different from a traditional whole life policy is obviously the rate of return you're going to receive on that cash accumulation, and of course your investment opportunities inside your cash accumulation account. So with an index universal life and IUL, you're going to have a maximum rate of return of interest you're going to receive, and of course there is a floor, which means you have safeguard against your investment. You're never going to fall below a certain percentage. You're guaranteed for that return. But of course, in really high performing years, you're going to be maxed out at whatever interest rate that may be. On average, looking at about 9%. And then in terms of a VUL, a variable universal life, works very similar, but typically there isn't a cap on obviously your rate of return. So the sky is the limit. But unlike an IUL, there is no floor. So obviously the downside, there has no limit either. It is a higher risk and more volatile, potentially, investment. In terms of the cash accumulation and how they invest, they are different. As I mentioned, the IUL does invest with the S&P 500, where the VUL, you have a lot more flexibility in which kind of investments and funds you choose. And it works a lot like a mutual fund would per se. Now, I want to reiterate that I, of course, am life and health licensed, but I also am a registered representative with FINRA. I hold both my Series 6 and 63 designations, so I am beyond qualified to help you understand not only what your level of protection looks like, but help you build your financial future. I will do that through a complementary needs analysis and give you illustrations based on your needs and your budget, and of course, your time horizon, your risk tolerance, and your overall goals. So you can give me a call at 602-525-5665 or check us out at gotprotectionaz.com. Remember to ask yourself, are you protected? We'll see you next week.